Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, April the 12th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Economic data from across the pond in Germany, CPI came in line with expectation. CPI in Great Britain came in slightly higher than expected. PPI, which is Producer Price Index, came in slightly lower than what was expected. Core Consumer Price Index came in slightly higher than expected in Great Britain. And here in the United States, we had the NFIB, which is the National Federation of Independent Businesses, which is the smaller businesses between 1 and 250 employees, came in slightly lower than expected, meaning they are not very confident. And we had import prices come in slightly lower than expected here in the United States. One thing that came out today, as you can see, I got the crude oil chart up /CL, was that the Saudis and the Russians came up with a input or an output cap. So they're kind of going to look to crimp the production of oil over in their sector of the world. What isn't really happening is they're not getting Iran on board with that. So whether or not this really works out, just because they've come up with an agreement doesn't necessarily mean production is going to get cut, because if they can't get Iran on board, the bottom line is Iran's going to keep producing, therefore they're going to keep producing as well. But that has pushed oil prices higher. I did tweet something out today that, a lot of people are getting real excited about oil rallying, probably because everybody's long. It's pretty hard to be short down here at these levels. But oil prices going up is not good for the global economies, because in a slowing economy, those higher prices are going to slow velocity of money. And what I mean by velocity money is when you can fill up your tank for less than $40 for the full tank of gas, you're going to have some extra money to be able to spend somewhere else, which creates that velocity money. Some people will buy toys for their kids. Some people are going to go out to McDonald's. Some people are going to go out to dinner somewhere else, or just spend that money in different ways. They're going to travel more and create velocity money during those travels. But if they are crimped on their spending because of higher oil prices, that slows down the velocity of money, and it's not going to help the global economy start to roll. So just keep that in mind. We'll have to see how much higher this goes, but higher oil prices when the economy is firing on all cylinders and manufacturing is really picking up and using that resource, then that is good. But this necessarily isn't good. But having said that, the overall markets are pushing higher. As you can see here, NASDAQ up about 19. They were down close to 20 earlier this morning, but have had a pretty massive move to the upside recently in the past hour or so. As you can see here, E-mini S&Ps /ES right near the highs of the day, up 16 points. Earlier today, E-mini S&Ps were treading water. They did touch into negative territory, but the NASDAQ was leading the way to the downside. Here's where you can see we covered the overnight low by basically the same tick, and once they did that, then it was, all right, we printed it, let's go to the upside, and they did. So they pushed much higher on that move there. That's /ES on the daily 15-minute chart. So you can see in the last hour and a half, they've just done nothing but move to the upside. And on to some trades that I've done. A couple of these I did yesterday in the afternoon. Apache, if you guys remember on one of the webinars that I did, the straddle with defined risk to the upside. This strategy had no risk to the upside, and it was because of the large credit we collected for the straddle. And I had on the April 48 straddle, and then I bought the 51.5 calls to define that risk. Looks like today it was luckily that I did this yesterday, but originally I sold that for $3 and about 80 cents. So even if it were to happen today, if you guys didn't have the opportunity to cover that, it's still going to be a profitable trade, just not quite as profitable as what I took out of it yesterday on the down move to the close to the 50 handle on that. But this one has no risk, so you could, since I collected $3.80, my risk was $3.50. So even above 51.5 in Apache, the credit on that is still 30 cents. But like I said, I sold that, collected a credit of $3.80. I bought it back yesterday for $2.30 because that was right there at 25% of my max profit. Very close to that anyway, that I talked about in that webinar. So anytime I'm dealing with a straddle and you get that large credit, I usually don't go for that 50% of max profit. I usually cut that back a little bit to about 25%. So that one worked out. On to GoPro. Now, if you guys have been with me on this GoPro trade, I mean, I've been in this since December basically of last year, and I originally had on the January. It was the January, I think it was the 1528 strangle on that. And yeah, 1525 strangle is what it was. And I have rolled that out, the 25 calls that I was short, and then short the 15 puts for that strangle. I rolled that out, let the 25s fall off, and then completely or continuously have rolled those 15 puts that are a loser. As you can see here, as soon as it started selling off, those 15 puts basically have gone into the money. Now, I've rolled those 15 puts out and kept collecting credits every single month, rolled them into the weeklies a couple of times, but I just rolled those out again, and I rolled my April 15 puts that I'm short out to the May 15 puts and collected another 35 cents for that. So my total credit on this is $3.77 now. So if you take that $15 and subtract the $3.77 from that, I am actually right there. Well, it's say $12. You add in that $3.77. That means I'm profitable by 77 cents at this time. So if I can get just a bit of a pop back to that 15 level, that's going to be a really nice winner for me. But you know, it doesn't look good on paper because I'm short the 15 puts. They're in the money, but because I've been able to collect that money over time, I have gotten it into positive territory synthetically, lowering that basis I talk about so much. I'm also trying to do that in Twitter. I'm short the 21 puts. I'm trying to roll those out. Again, that one isn't going to be profitable unless I get up into the $18 range. But if I can continue to lower my basis on that Twitter, it could end up being just like GoPro and be positive. On to GM. I didn't do any trade in this, but somebody did a trade to me, and I did this for the webinar also, gearing up for earnings season. So we've got earnings season starting up basically, with today, because I'll talk about that in a minute, but earnings are starting to be released coming up now, and I did an earnings season trade on this with the webinar, and I had on the April 30.5 puts that I was short, and then I got long the April for 30.5 puts. And what happened is somebody decided to put those 30 puts to me. So now I am long stock. So because I was short the puts, they're in the money. Somebody decided to put that to me. So now I'm long GM stock at 30.5, but I'm short those 30.5 puts in the April weekly. So probably going to ride that out for a couple more days to get a bit of a pop. Then I might look to cover that trade there. On to the earnings trade that I was talking about for tonight. We got JP Morgan coming out today. Well, we got to put on the trade today because it comes out tomorrow. And I've done an earnings calendar trade for this, I've done earnings setup trades at ProTraderStrategies.com. You can go to ProTrader Strategies and get that webinar on that. But we're looking at the market maker move on this, and the market maker move is about $1.47. It was $1.55 earlier. Volatility keeps coming off in this. As a matter of fact, when I was looking at this trade earlier to see if it would set up for this this type of earnings trade, it was at about 31% on the IV percentile down there. It's just coming off. There's just no reason to get involved in this with that low of an IV percent. I would expect to see this somewhere near 80 or something like that. But because the IV percent is so low in this, there's not very much premium in this strategy, so you would have to come really close to the market maker move. I like to get outside of that. So probably not going to put on that trade. Gone a little bit long today talking about everything. Go to ProTraderStrategies.com. We're going to be talking about these calls and puts and creating straddles and strangles coming up here shortly. So go to ProTraderStrategies.com, sign up for that. And if you can't take that, take it easy.